Is Archer and Joby Aviation a millionaire stock maker? Let's do this, guys. We're back with another long video, so make sure to smash that like button to make sure I know you like the long form content. If not, I'll go back to the short videos. Hold up, guys. I will get how many shares of both Joby and Archer is forecasted in order to become a millionaire further in this video. So stick around and make sure to smash that subscribe button right up there to join the fastest growing eVTOL channel here on YouTube. So today I'm going to introduce both Archer and Joby Aviation to the new guys. Then I'm going to tell you the route to the millionaire status and how much shares you need of both Archer and Joby to make $1 million. So strap yourself in and let's get excited. The transportation sector is on the brink of a revolution with the advent of electric vertical takeoff and landing aircraft. Archer and Joby Aviation are at the forefront of this emerging market, and are often touted to as potential millionaire maker stocks due to their innovative approach to urban air mobility. What exactly makes these stocks candidates for such a dramatic return? And what's the risks and realities involved for investors to consider? So let's do a quick rundown for the new guys, and we're going to start with Archer. Archer Aviation aims to transform urban travel with its electric air taxi service, focusing on short distances that are currently plagued by traffic congestion. Their flagship aircraft is known as the Midnight, and it's designed to carry 4 passengers plus a pilot, and it has a range for city-to-city hops. Archer has secured partnerships with major players like United Airlines, and they aim to integrate their services into already established transportation ecosystems, which could provide significant boost to the adoption rate. Archer has been actively pursuing FAA certification, a critical step towards commercial operations. They've already achieved an important milestone like the Part 135 Air Carrier and Operator certification for conventional aircraft, which they will use to redefine operational procedures. Collaborations with United Airlines and Stellantis not only validate Archer's business model, but also provide the company with crucial operational and financial support. Archer is also in the process of constructing type-conforming aircraft, which is essential for the next phase of FAA testing. Now, for all investors in Archer, let's define the growth trajectory. So if Archer successfully navigates the certification process and scales its operations, the potential market for urban air mobility could be enormous, with analysts forecasting a multi-trillion-dollar industry. Recent surges in co-options activity and positive market sentiment indicate that some investors see significant upside potential. However, investors should be aware that the high cost of certification, development delays, and the need for the public acceptance for the new mode of transport, with regulatory hurdles and competition from other eVTOL developers such as Joby, could also impact Archer's path for profitability. Now we've got through Archer, let's move on to Joby. Joby Aviation has a long history in the eVTOL development, and it plans to operate a network of air taxis, initially targeting cities like Los Angeles and New York. Their aircraft can carry up to 5 people, and that's including a pilot, for distances up to 150 miles, with a business model that includes both operating their own services and selling aircraft to other operators. Joby has been in the certification race, completing the 3rd of 5 stages necessary for the FAA type certification. They're currently 37% of the way there on the 4th. This includes comprehensive testing and acceptance of key certification plans. Joby's international expansion is on the up, with recent demonstration flights in Japan that were backed by Toyota illustrate their ambition for a global market penetration, showcasing their capabilities and gaining international experience. Joby have investments from Toyota, Intel Capital, and they have a big partnership with Delta Airlines. This makes them have the most robust financial profile in the eVTOL sector, which is critical for sustaining a long runway to commercialization. For us investors, Joby's advanced stage in certification and their strategic partnerships position them well to capture their significant market share in the eVTOL market. The plan to integrate with existing airport infrastructure for passenger transport could accelerate adoption through familiar travel patterns. There are risks like Archer though. Joby faces risks related to certification, acceptance by the public, and operational challenges of maintaining a scaling fleet of eVTOLs, while the competition and technological obsolescence are also big concerns. So guys, investing in Archer and Joby gives us one big question: are they millionaire makers? So let me tell you why they could be millionaire makers, and let me break down some numbers for you. Market size and growth is massive in the urban congestion, and the shift towards sustainable transportation could drive explosive growth in the eVTOL market. A company capturing a significant portion of this market could see their valuation skyrocket. Both Archer and Joby have generational innovation, and the first mover advantage of both these companies are at the cutting edge of eVTOL technology. Being the first to market can lead to a dominant position, similar to Tesla's in electric vehicles. Partnerships in both companies not only provide capital but credibility, customer base, and operational know-how, which is all pivotal to scaling up. They are paving the way for the regulatory pathways and progress with the FAA certification, and it's a strong indicator of potential success. Achieving the milestone could significantly de-risk the investment from a regulatory standpoint. Hold up guys, I will get how many shares of both Joby and Archer is forecasted in order to become a millionaire further in this video. So stick around and make sure to smash that subscribe button right up there to join the fastest growing eVTOL channel here on YouTube. Guys, it's not all green fields and roses. There is incredible risks and realities investing in both Joby and Archer. So let me give you 5 of them here. So at number 1, we have technological risks. While both companies have made significant technological strides, there's always a risk of unforeseen technical issues or better technology emerging. And number 2, we have regulatory delays. The certification process is fraught with potential delays, which could push back timeliness and affect stock valuations. And number 3, we have market acceptance. The public sees eVTOLs travel as safe, convenient and affordable. Any skepticism or slow adoption could lead to hindered growth. Number 4, funding needs. Both Joby and Archer will likely need to raise more capital, which could dilute current shareholders unless accompanied by significant progress. Number 5, competition. Both Joby and Archer are competition to each other. The eVTOL space is getting crowded, with both new entrants and established aerospace companies like Boeing and Airbus showing interest. However, I'm not too worried about Boeing. Thank you for your patience. And now we get to why I know you're waiting. Before I do this, I need to say this is not financial advice, but it's for entertainment purposes only. I'm going to assume 3 bullish models. A 5x, a 10x, and a 20x. Some say it's too bullish, and others are going to say it's not bullish enough. Well, I'll stick to these figures, just to make it easy for you to understand. Let me make something clear for the new guys just before they jump into Archer and Joby Aviation. And I'll do this just before we break down these numbers, and I'll tell you how many shares right away. For those considering an investment in Archer and Joby Aviation, it's crucial to delve deeper into the strategies behind choosing these stocks as part of your portfolio. Let me give you the top 5 reasons quickly on what you need to do before opening any sort of position in these companies. So at number 1, we have entry points and timing. Understanding broader market trends in technology, sustainability and transportation can help investors time their entry. For instance, after a significant announcement regarding partnerships or progress in certification, stock price might experience volatility, more to the upside, offering potential entry points at the dips when they pull back. The eVTOL industry could be sensitive to economic cycles. In times of economic prosperity, like we're at today, there might be more appetite for speculative investments, whereas in downturns, even promising technologies like your Teslas could face funding challenges. And number 2, we have portfolio allocation. Now I do know I'm going to get butchered in the comments by some of them all-in investors, but it's true. Risk management. Even if one believes the potential in Archer and Joby, these stocks typically represent only a fraction of a diverse portfolio. The high risk, high reward nature means they can be balanced with more stable investments. So at number 3, we have exit strategies. I know I'm going to get butchered in the comments. Long-term holders give a long timeline for eVTOLs to become mainstream. Investors might plan for long-term hold, betting in the sector's growth over time. And this is the one that's going to kill me. Milestone-based selling. So alternatively, you can set price targets based on company milestones, like FAA certification, first commercial flight, significant partnerships. These could all guide sell decisions. So number 4 guys, you need to monitor progress. Technological developments are a big one, so investors should stay informed about technological advancements, not just within Archer and Joby, but across the industry to gauge competitive edge or potential disruptions. You also need to keep an eye on regulatory updates, so regulatory news will significantly impact these companies. Any changes in the FAA rules or international aviation regulations could either propel or hinder any progress made. So number 5, community and analyst insights. You can join my community. We are the fastest growing. But on a serious note, engage with analysts. Follow analyst reports and forecasts. They can provide additional layers of insight. Analysts offer the deeper access to the company's internals and can offer projections based on more data. Investors communities like ours, you have online forums, social media, and investment clubs dedicated to tech or aviation, and it might offer value for peer insights, although one should always be critical and assess such information you hear. So guys, you're going to wonder why I'm off centre. This is why. So I'm going to first look at a 5x for both Archer and Joby. So first, for Archer we have the current market cap of 2.4 billion. The market cap needed for a 5x increase is 2.4 billion multiplied by 5, and that equals 12 billion. In relation to Joby, the current market cap is 5.3 billion. The market cap needed for a 5x is 5.3 billion times 5, and that's 26.5 billion. Again, this model does not account for potential dilution through new share issuance, which can occur when the companies expand operations or raise additional capital. So guys, I'm going off a quick 572 for Archer, which was in the middle of today, and a 688 for Joby. Right guys, now time for the fun part. We're going to start with Archer. Today's current price in the middle of the day was 572. We're going to see how many shares are needed at today's price to have $1 million. We're going to go 1 million divided by 572, and that equals 174,825 shares. So at a 5x, we're going to go 572 by 5, and that equals 2860. 2860 is the price for 5x from today. So how many shares are needed for $1 million if we 5x from here? So how we're going to do it, we're going to go $1 million divided by 2860, and that equals 34,965 shares. That now tells us we need 34,965 shares today if we think it's going to 5x and just hold. Now let's do the same with Joby Aviation. So the current price in the middle of today was 688. So the shares needed for $1 million at the current price is 1 million divided by 688, and that gives you 145,349 shares. To get the 5x price from here is 688 by 5, and that equals 3440. So how many shares do you need for $1 million at a 5x? That's calculated by $1 million divided by 3440, and you will need 29,070 shares if you want $1 million and you think it'll 5x from today's price. Now you're going to ask me how much money. How much money is easy to work out? It is always going to be 200,000. 200,000 is always going to be a 5x. Now time for the more bullish scenario. We've 10x. So Archer Aviation's current market cap in the middle of today was 2.4 billion. The market cap needed for a by 10 increase is 2.4 billion by 10, and that's 24 billion. With Joby, the market cap is 5.3 billion. The market cap needed for a 10x is 5.3 by 10, and that equals 53 billion. Now let's get into the fun stuff. So Archer Aviation, at today's current price, 572. The shares needed for $1 million, we've already worked that out. That's 174,825 shares. A 10x from today's price is 572 by 10, and that equals 5720. To get to $1 million at a 10x is $1 million. We divide that by 5720, and that would mean you would need 17,483 shares of Archer today and hold it for a 10x. Now for Joby, current price 688. We know the shares needed is 145,349 for today to be a millionaire. So the price at a 10x is 688 by 10. That equals 6880. To become a millionaire at a 10x is 1 million divided by 6880, and that equals 14,535 shares. You need 14,535 shares today and hold it for a 10x, and you'll be a millionaire. Now I hope you're still with me. We're going big, we're going 20x. So we know Archer Aviation's current market cap is 2.4 billion. 20x from that is 2.4 billion by 20, and that equals 48 billion. Joby Aviation's current market cap is 5.3 billion. So the assumed market cap of by 20 is 5.3 by 20, and that is 106 billion. And we are talking about hundreds and hundreds of billion-dollar industry. So for Archer, the current price is $572. Shares needed for $1 million at the current price we've already worked out, 174,825 shares. The price at a 20x is 572 by 20, and that equals 114.40. The shares needed for $1 million at a 20x is 1 million divided by 114.40, and that gives you 8,741 shares. It's now time for Joby. The current price, $688. We already know the shares needed for $1 million today is 145,309 shares. To get the 20x price, we go 688 by 20 is $137.60. The shares needed for $1 million at a 20x is $1 million divided by this 137.60, and we're getting to an achievable 7,267 shares. 7,267 shares needed to become a millionaire at a 20x. So let me be clear, this is a calculated gamble. Calling Archer and Joby Aviation millionaire maker stocks involves a mix of optimism about the future of urban air mobility and a realistic assessment of the challenges. Investors who believe in the vision of the world for eVTOLs a common sight might see these stocks as compelling, especially if they enter a point where the companies are still undervalued relative to their long-term potential. However, the journey from innovative startup to industry leader is fraught with risks. For those with a high risk tolerance and long-term investment horizon, these stocks could indeed offer substantial returns. I've just shown you there. They represent a bet on the future of transportation, on human innovation, and on regulatory and societal acceptance of new technologies. As with any speculative investment, diversification is key though, and investors should be prepared for the volatility. The real question for potential investors is whether they see the skies filled with eVTOLs in the coming years, and if so, will it be Archer or will it be Joby leading the charge? Or will it be both? I've done a deep dive in the market forecast for Archer and Joby, so make sure to watch this next to know the path of success for the two companies.